Lemon today, we saw a deep sell-off, down almost 15% today. Um, so if we take a look at this stock, there's a couple of things that we would like to note here. Looks like we got a couple of very strong supports here, um, right in the 260 range. Could come down to there. Also, to note, looks like in ever since 2020, we've had what looks like a megaphone pattern. Um, this could be a megaphone top. So if this bounces and we see it break out above, then it's a bull. But if it breaks below this, it's a bear. So it looks like the area of interest is mainly between 250 and 208. If it breaks below that 208, we're definitely in a bear trend. It's confirmed that we've broken this support zone right here, and we're in the bear zone. But if we tend to bounce off this 250 range and back up, that might be a bull case scenario for Lululemon, as we see a number of things unfolding today in the market as auto tariffs, etc., are hitting consumers. So we'll see if this is a Elliott wave here. It looks like potentially could have been an Elliott wave here pattern. Maybe if it comes up here, eventually we'll have an Elliott wave, and if it bounces off this support zone and head higher. So time will tell. So let's see what happens in the coming weeks. Now, as mentioned, the semis got kind of smoked today, SMH. We're seeing that this is a very bearish trend here, although not a huge downtick in accumulation distribution. So if it breaks this line here, we're definitely confirmed headed lower. I believe we're headed into this 260, between 265 and 172 range in SMH, and this does look like a topping pattern, but yeah, to get the confirmation, let's break below there. So today we had selling. Number one, it's a Friday. Number two, you had the auto tariff news, which affects the semiconductors and the auto industry. And people were talking about the relative strength of Tesla today. And it was relatively strong compared to others in the space, but yeah, it's just a blip because they use a lot of semiconductors in their building of their cars. So if they're using any parts from anywhere in the world to build their cars, they're going to be paying more for it, and can't increase their prices because consumers basically had it. So it's going to eat at all the margins if this actually comes to fruition, this auto tariff. So what we're watching closely here, what I said were kind of a couple of plays that could be a rotation play is Hain. Now, Hain actually looks like it might have this bullish MACD cross here on the weekly. And in before that bullish MACD cross has increased the share price a little bit in the short term. But it does look like there's some accumulation here at the bottom in a long period of it, in a downtrend of accumulation. So really, I think we have to watch this one very closely. I think that we'll get a pop in Hain. It's been in a bottoming pattern, in my opinion. Recently, we see. Let's see, take a zoom in. Really, it's not going beneath this 350 level. It's tested it twice already, once and then twice again. So we see a couple of tests of the 350 level, and what we want to see is the follow through. So we see the accumulation go up here. People are going into this because it's not semiconductor, it's a food stock. So that's the same thing that's happening to farm, but we saw that today we got a pretty large rejection of the impending MACD cross. So we're just watching this very closely. We're just watching this very closely. It looks like we had a bearish cross here. Maybe we'll come back down to this zone in farm. Probably a buying opportunity if it gets down to either one of these gaps and fills them as people rotate out of the high risk sectors into more stable sectors like General Mills and things like that. But we're seeing a lot of accumulation here, even in the food stocks in the short term. There's a lot of distribution happening, so we want to just pay attention to this very carefully. This General Mills is in some kind of downtrend. It looks like it broke this support line right here, somehow retested and down. But in the long run, we know that General Mills is a winning stock. If we get a bigger sell-off in General Mills, we'll be buyers of this one for sure. So yeah, a couple of consumer-centric stocks. Nike too. Nike's really fallen out of the bed. The distribution is going way down. We're seeing really no signs of life here in Nike. It's kind of a dead stock at this point. It could go down. Who knows? Another 10 points. We don't know. It's definitely one that will recover given enough time, but right now is not looking investable. So let's look at SPY in general and then the Qs to finish it off for today. So SPY, we said we'd have this little pattern going on. Perhaps this is my 2-year forecast for SPY, just reviewing my 2-year forecast. Basically, I said that this is my 1 to 2-year forecast of SPY that will come back down to this 400 level, fill these gaps that do exist in the chart. If we look at the gaps in a 1 year, let's see here. We see these gaps here, right? 425 and 440. So those gaps are likely to be filled. Right now, it's hard to tell if they'll be filled soon, but we do see the MACD here looks bearish. So could there be a couple of more days more selling in the market in the short term? Sure. So we want to see some kind of consolidation and either a breakout above or below. I think it's going to go below, but we don't trade on the what we think. We trade on the price action. So if it breaks up below, then we're bearish trend here in this consolidation. If we tend to consolidate and break out above, then that just kind of confirms that the bull case is on, and there's going to be some kind of relief rally due to the tariffs or something coming down or whatever, then this will head higher. But for now, it looks like a bear case scenario for this stock. So SPY and Qs is the same exact thing. So we saw it come down, go up a little bit, and then head back down again. It's almost the same chart as the SPY. And GLD we saw went up today. It looks bullish. This can go head higher. It's breaking to new highs. Again, I believe that there's a bubble forming in gold and also potentially in gold miners, although not yet. So if you're feeling ambitious, you want to ride the wave, you could probably ride the wave another 10% in gold, but I'm not in it because I believe that in the next, let's say, 6 months to a year, gold will head down. And that historical precedent has been set in the past by gold, because if we look at SPY, for example, I mean, gold in 2020, in the COVID, in the COVID crash, we crashed from 158 to 137. So there was panic selling even in gold. And if my chart goes back further enough to 08, we see, yeah, in 08 we had the financial crisis, so it went from 100 down to 70 or so, 35% decline. So gold, is it's bullish on the way up. So like if you're heading into the crisis, you see it's very bullish action. This price action is very bullish. So if you bought down here, that's right near where we were, and you sold somewhere in here, you're golden, so to speak. You got this kind of longer term bull flag, and then we headed higher. But if you bought here, you were really golden, and here sold here, you were wonderful. So you saw that bull flag form, and then we got the. So there's basically historical precedent to say that going into the crisis or going into a recession, gold actually rises, and that's exactly what we're seeing right now. Is the same pattern but bigger. We're seeing this kind of consolidation period, almost looks like a bull flag, and then breakout. Now, where's the top? Who knows? Nobody knows where the top is. So, but whatever it is, it's going to be in hindsight, and then we're going to see this head lower to retest these values down here, somewhere in the 190 range or 200 range. At once, whatever crisis or recession or whatever happens in the market hits, whatever news headline that day, will take it out. So that's my review for today. Hope you all have a good evening, and like, subscribe, and comment, and stay bullish out there, stay bearish, and just stay on top of your trading and whatever your positions are, whether bullish on gold or bearish on other assets, and let the markets be with you. Take care.